Good morning. Time now 8 o'clock in the morning in Tokyo, Friday, April 16th, 2021. Welcome to another edition of the World Bank Group morning seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. We organize many interesting seminars starting at 8 o'clock in the morning in Japan Standard Time, almost every week in the last 3 years, introducing the latest report presented by the World Bank Group economists and specialists. Every spring and autumn, each of 6 regional chief economist offices of the World Bank will issue regional economic update report. For the spring 2021 semester of the regional economic update, we have already featured East Asia and the Pacific and Europe and Central Asia in the morning seminar. Today, we are shifting our focus to South Asia. By the way, the very first morning seminar was held on April 18th, 2018, 3 years ago, featuring Martin Rama, the former chief economist for South Asia, presenting the April 2018 edition of the South Asia Economic Focus Report. We are happy to mark our 101st morning seminar this morning with the latest edition of the same South Asia Economic Focus. Connecting from Washington, we have 2 economists in the office of the chief economist for regional, the chief economist for South Asia region. First, Maurizio Busolo, the lead economist of the South Asia chief economist office. Good morning, Maurizio. Good evening to you. How are you? Can you hear us?
Good morning to you. I'm very well. Thank you very much. Glad to be here to present the latest report.
Great, thank you. This is your second appearance in a morning seminar. 3 years ago, actually, you presented toward a new social contract report focusing on East Asia and Central Europe and Central Asia region. So welcome back to our seminar.
Correct. Thank you very much. Nice to be here.
Great, and I like your CDs behind yourself. Perfect. I presume you are the music lover too. We also have Valeria Massa-Blackman, the senior economist from the Office of Chief Economist for South Asia. This is your third time to present the South Asia Economic Focus in our morning seminar. Good evening to you, Valeria. Welcome back to our seminar.
Good morning, Koichi. Nice to be here.
Great, thank you very much. So we'll listen to Maurizio and Valeria presenting the main point of the report in the next 30-40 minutes. Then I'll read questions received from our viewers in advance. And thank you very much for sending those questions to us. If you did not have opportunities to send your question in advance, I would like to encourage all of you to send your questions during the seminar. You can send your question by online form on the announcement page of our seminar, or you can certainly post your question on the chat section on the YouTube screen if you like. I would read your questions, asking the speakers to respond after their keynote presentation. So with that, I would like to invite Maurizio and Valeria to come in and start your presentations. Over to you.
Let's see. Do I unmute? Hello, can you hear me?
Yes, perfectly, great.
Oh, good, okay. Can you see my screen?
Yes, we can see your screen. You may want to put it in a full screen mode. Yes, great, thank you very much.
Okay, good, thank you. So good morning, everyone again. Yes, I'm going to present as usual. The publication usually has a theme chapter, which in this particular time is about South Asia Vaccinates, and Maurizio, my colleague, will spend most of the time talking about that. I'm going to start by telling you a little bit about how we see the recent developments. We have much more evidence now about what happened in 2020, this terrible year for South Asia. And we also want to talk, we'll present the forecast, but also tell you a little bit about why we think that, for example, thinking about fiscal policy post-COVID is going to be a very different endeavor than before. So first of all, we need to think about an incomplete recovery. And the first slide I want to show you is what's happening with the COVID cases. So in the chapter, actually, we talk about how per capita caseloads and death rate had so far been better than expected. And the chart to the left shows you the cases per million for each of the South Asian countries. Maldives, which is dotted, has a different axis. It's cases per 100,000 people. Against what's happening in the world, which is the shaded area. And if I had come and presented this to you two weeks ago, I would have said, well, you know, South Asia has done fairly well, except for, you know, a big surge in Nepal, but a brief surge. Most of the other countries have really kept their cases quite low relative to the rest of the world. And now you see this last surge that happened in India very, very quickly, sort of really caught them off guard, so to speak. And of course, we're still seeing that. They've already instituted some restrictions, but that's what we have now. But then I also wanted to relate it to what that meant for how these restrictions, as you know, India and other countries had some of the strictest lockdowns in the world. They had a period of 2 months in which, you know, the stringency index was practically its highest. And a lot of the discussion at the time was, well, this is a region that really has a few livelihoods. As you know, that last time around in October, we discussed what a terrible effect it had on the informal sector. But you can see that the last quarter of 2020 seems to be showing already a recovery. And even at the end of the third quarter of 2020, we already see indicators like, for example, presence in the workplace, Google mobility, really going up to the zero line, to the pre-COVID levels. The two exceptions where you don't see that as much is Nepal and Sri Lanka, which came with very strong restrictions during August and October when they had some localized surges. But another way in which, for whatever reason, whether for policies or for other reasons, could be because of the fact that the population of South Asia is relatively young, incidence of obesity and diabetes, which is related to COVID, is not as high as other countries. The fatality case ratio, so in other words, the number of people relative to reported cases, which of course is not, we know is not necessarily the total, is below the global average. Except for Afghanistan, which actually has the opposite problem, which is that testing is so low that we see that anyone who gets tested is probably at the hospital. So, you know, these are not as bad, of course, still bad, but not as bad as other regions. We also have new data from high frequency indicators trying to explain to us what happened throughout the year. So for 4 countries, we have GDP at a high frequency at a quarterly level. And so we used a nowcasting technique, so sort of a machine learning technique, to see what actually happened and to corroborate what might have actually happened. And you can see that the second quarter of 2020 was indeed absolutely the worst for India, Sri Lanka, Maldives, and Nepal, the countries there that have quarterly data. And for countries that don't have quarterly data, especially Pakistan and Bangladesh, large countries, we were able to use other techniques to try to understand also what happened throughout the year, sort of just to see sort of the trends. And again, you can see that already by the third, fourth quarter, you see economic activity returning to pre-COVID levels. A little bit less in Sri Lanka. Again, Sri Lanka had a late surge at the end of the last year, and that had an effect there. One of the things we look at, so there's two sort of issues we spend a little bit more time looking at in the first chapter. One is remittances. Remittances are very important for South Asian countries. They're a stable and counter-cyclical source of income and a lifeline for many low-income households. In fact, India, in dollar terms, India is the country that receives most remittances compared to any country in the world, and Nepal is the second or third largest in terms of remittances as a share of GDP. So, and you can see on the left-hand chart that remittances not only have grown dramatically in the last 20 years or so, but they are way larger than the other flows into the countries, such as FDI, portfolio equity and official development assistance like multilateral and bilateral aid, they surpass this. So you can see how important they are. And they also tend to be quite well targeted to the households that need it the most and when they need it. So it has a sort of countercyclical property, which is very important. The middle one shows you that migrants really go to all sorts of different places. About half of them go to GCC oil-producing countries, but there's also a lot of inter-regional migration that is not seen so much. And we don't have Maldives and Bhutan in there, but they have even more inter-regional. So this is one area in which there's more integration than others, shall we say. It's about 45 million migrants. And the third chart to the right shows you that, and this is where there was a lot of concern and why actually even in our case, we were all projecting, 22% drop in remittances during 2020 was because migrants in advanced economies are generally involved in content-intensive services sectors, hospitality, domestic work. So we knew that even the nationals of those countries were losing their jobs, even more so if you were a migrant, and many of them returned. So we looked at the analysis. First of all, we looked at the year-on-year change of most of the countries of remittances, which is on the left-hand scale. And surprisingly, except for, of course, the beginning of the year, at the end you saw increases, and in some cases, 200% in Bhutan, and others, 30, 35%. 40%. So we tried to explain this, and one way to do it was to say, well, let's do a regression of the kinds of variables that mattered in the past 10 years for each of the countries, the growth rate differentials between center and receiving country, the share of the interest rate differentials, exchange rates, and then include also unemployment as well, and then do an out of sample forecast or prediction of that for 2020, which is the number that you can see on the rightmost column of that table. And you can see that actually there was a prediction that you should see an increase in remittances, and in some countries not too far from what we actually did see. For example, you see Nepal had a minus 0.8, but you also looked at other forms of measuring it, indirect forms of measuring remittances like errors and omissions, and actually it could have been higher. So there's also these issues of measurement errors in the remittances, and so then we tried to explain why that may be. And what this means for the future, right? So a host of reasons explain this rise in remittances in 2020. First, a portion of the recorded rise in remittances probably represented of repatriated savings. We know that a lot of immigrants were brought home in special flights, and they just put them in their bank account. So that's not going to last. We know that there was a net migration, which is different. In the past, usually you have net immigration to the sending countries, and this time we know that many came back. Secondly, remittances could have shifted from informal to formal channels. So the data we have usually shows balance of payments data, and maybe what we're seeing is just the fact that they couldn't, people couldn't go home to visit their families or give money to sort of trusted friends or buy presents. They had to send it to formal channels, so maybe that was part of the problem. The third reason might have been financial innovation, which we know has really increased during 2020, and it likely encouraged greater formalization and perhaps even larger total remittances if the transaction costs were lower. The fourth was tax policy changes may have encouraged greater remittances, or at least greater formal remittances. So, for example, Bangladesh and Pakistan in the middle of 2020 had quite nice tax incentives if migrants used formal channels. So maybe that's all we're seeing is a sort of a one-time increase. Fifth, some migrants were able to access cash transfers offered by host country governments. So many of the sort of pay protection programs and stimulus did actually go to some migrants, and they would have probably sent it home to their families. Another issue is that these dire economic conditions for South Asia really could have encouraged just greater altruism, because in fact, Findex and some other indicators do show that South Asian households do depend on families and friends quite a bit more than maybe other countries. The upshot, there's really not enough data and evidence to disentangle which factors would be important in explaining what happened in 2020, let alone whether they're temporary or permanent. Some of our country economists are a little more pessimistic. They're saying, no, this is part of structural changes in the Gulf cooperation countries. We know that there's They are winding down these large construction projects over decades, and are encouraging more of their own workers. On the other hand, other people are saying, fintech has really taken a big dive, and many governments that have immigrants, like Singapore, for example, are doing a lot of things to really encourage fintech transfers. The second issue that we looked at in this chapter, again, as I mentioned before, is not only do we have more data about the recovery in economic activity and when and how that happened, but also the disparate effects of the pandemic across different segments of society. And we look at 7 dimensions. The first is on tourism. So tourism-dependent economies like Bhutan, Sri Lanka, Maldives, and Nepal saw a drastic drop in tourism arrivals. And we also looked at flights and seats on flights to sort of correlate that and sort of expand and forecast it forward. And we still see that that's the case for Bhutan and Sri Lanka. Maldives is really trying very hard to revive it. They have new tourists from India and from Russia that sort of new type that don't just stay in the large resorts. And Nepal could also be other types of visitors, but you can see that until this sector recovers, these economies will just not be able to improve, especially Maldives. The second is that firms, of course, it suffered quite a bit in South Asia, especially the smaller ones, had to make decisions. And even though in many of the regions you saw they reduction of the extensive margin. In other words, they fired a lot of workers. South Asia did sort of adjustments on the intensive margin. In other words, they tended to cut the number of hours worked per worker, they cut the wages per worker, and they also had more absences. So that also had an impact, of course, on some types of workers. And as you'll see in the next slide, women, for example. As we all know as well, there's a lot of new evidence from these COVID phone surveys that show that some workers suffered more than others. So on the left-hand side, you see a bar chart of the workers in South Asia that had some sort of job market deterioration as a result of COVID. And you can see in most countries that are there, it's more than 50%, 70%, especially for services. And this is even more devastating if you see from the dots there that the share of more than 75% of workers work in the services sector in South Asia. So this is something we had already talked about, of course, last time with the informality sector and everything, but now we actually see more evidence of it. And the reason for job distress could be various, right? It could be temporary absence from work, earnings losses, job loss, all of these things in this we're often in this circle. And then women, we have a lot of anecdotal evidence that they're the ones that would stay at home and do more of that. But some early evidence also shows that whereas both men and women suffered in May a reduction in employment, the sort of revival back, even though women have always a lower labor force participation rate, is also lower for women. And there's also some social norms involved in this too. The other part is on income distribution and how the COVID affected this. We have some simulations that were done on income inequality, and you can see that the Gini coefficient, which is on the gray, actually increased quite a bit. And this is a large number if you consider that Gini coefficients change very little over years. They change in decades sometimes, but they don't change that much. And you can see that the difference is quite large for India and Pakistan. And then another measure of extreme inequality, which is the loss of the poorest 90% over the loss to the richest 10% as a result of COVID, is even larger for Pakistan and India. And one of the reasons this may have happened was because food is a very important staple, and food prices really went up quite a bit. In fact, they were the largest contributors it was the largest contributor to headline inflation, food inflation, as you can see on the right-hand side, the yellow part of the bars. And this happened because of, first of all, it was bottlenecks in food supply chains, but then there were all these export restrictions that began, especially in the third quarter, had a big impact, for example, in Bhutan. And this also, brings to mind, well, not only the fact that it's very important there, but also that this could have been much worse had it not been for fairly good agricultural production, and also fertilizer and transport prices were lower. So this was a big problem in South Asia. Finally, on the sort of disparate effects of the COVID crisis, we sort of tried to juxtapose the COVID cases by region, which is a top The top three maps there show you the co-incidence rate. So whether it's from Johns Hopkins, so high risk, for example, would be if you have more than 10 per million per day. And then the bottom is a nighttime lights intensity, which is sort of a measure of economic activity. And if you look at the first column, that tells you sort of during the lockdown period, what was happening. We know that in most areas, there were very few cases in South Asia, but because of the very strong lockdown, especially the metropolitan urban areas had large changes in output relative to the year before. So this nighttime lights intensity is relative to the year-on-year change from 2019 in this case. And then during the peak of the breakout of COVID, you can see mostly in the south of India, we did also see, of course, that there was some relationship between nighttime lights and probably because of some of these restrictions. And then now, this is the early recovery just before this new breakout, where really it was only limited mostly to some places like the Maharashtra, Kerala. We see that these areas already had quite a bit of activity. So in the upshot is we don't see a lot of relationship between these two things. And it could also mean that some regions are more strict than others in South Asia. So now moving to our forecast, the region is expected to grow strongly in 2021 by 7.2% and then 4.4% of GDP in 2022. Just a lot of it, of course, is a base effect, as 4.4% is actually a little bit lower than the pre-COVID sort of average growth. So the bounce back is really a lot of that. India, though, is going to be doing a large expansion in government consumption. And the bottom one shows you the growth rate and also the contribution of each of the demand components to growth. And here I just want to show again, the nature of this crisis and how bad it was. Whereas before, for example, the first bar to the left showed you the global financial crisis, you really didn't see much of a change for South Asia. And it looked very much the same as a sort of the composition and growth than before the crisis, which is the next bar. During the 2020 crisis, you see not only a large drop in consumption and investment, but also in consumption, which is unprecedented ever recorded. And then, of course, you'll see more of this improvement in 2021, and a lot of it will be not just consumption and investment, but also a government stimulus effect. On the right-hand side, you see what this means for income per capita, and the red dotted line is our new revised forecast relative to October, which is the orange one. So a little bit better than what we thought would happen before, but certainly still much less than the blue dotted line, which represents sort of the pre-COVID counterfactual. And so we still say, the 2 to 3 years loss of development. And another area that we looked at, as I mentioned, is fiscal and, of course, the debt situation, which is not just an issue for South Asia, but for many of these emerging markets. And so South Asia countries do vary substantially. Countries have very different fiscal spaces. None of them have much fiscal space, but even within that, some differences. And also vulnerability to external shocks through the fiscal. And the way we did that is we did we call sudden stock counterfactual, which is we said, well, what would happen under a situation in which, let's say, there was no external financing. So basically, private creditors from abroad became so risk averse that there was no new financing, and there was only enough to pay for amortization of either countries by multilaterals, but nothing else. Of course, it's a drastic assumption. What you can see is that actually for South Asia as a whole, the impact would be not too large in terms of the bars show you the financing losses as a share of total expenditure, so how much you would forego. And it's really just Sri Lanka and Maldives especially that do see a significant increase in that. But as a share of GDP, all of them have between 0.6 and 1 percentage point of GDP lower than the baseline forecast. And on the right-hand side, you can see also that the difference of situations sort of that they have in terms of external debt. So Bangladesh, Nepal, and India, which have very different debt levels to GDP, but their external debt is fairly low, and we don't see problems in terms of debt distress there. Pakistan and Bhutan both have high debt. However, Bhutan, because of its special arrangement with India on hydropower, is not going to have much risk from their debt. And Pakistan has actually been quite proactive. I mean, they do have high debt, but they've taken on the DSSI program, debt service suspension initiative, and they have also worked with the IMF and creditors to really make sure that they can keep their external risks to a minimum. Afghanistan has very low debt, but it really has no domestic financing, so there's a risk there. And then Maldives and Sri Lanka have some debt distress, although we believe that if Maldives is able to resolve its tourism revival, which of course is not its fault, this could make a big difference for its debt distress. So the fiscal challenges for South Asia, of course, existed before the crisis. We have some measures of fiscal policy under the region. You can see fiscal policy is highly procyclical in South Asia. Real GDP growth and the fiscal balance move practically in tandem, which is supposed to be the opposite, right? And this was even more true also in 2020, because even though everybody thought that they would have an increase in government expenditure, they didn't really. Actually, it was monetary policy that really came in. So, and there's also the problem of government revenue mobilization, which is very low as a share of GDP. If you look at compared to other regions, only sub-Saharan Africa has it quite as low, but very similar. And even worse is the fact that a lot of that is non-tax revenue. So if you just look at tax revenue, it's extremely low in many countries, and it's not going to get any better. The somewhat good news is that the stimulus that they're expecting to do, the government consumption is expected to grow by 16.8% in fiscal year 2021, is going to be corroborated by this very high multiplier that there is on the total expenditure. So an increase in a 1 percentage point increase in government expenditures will have an immediate impact on GDP growth in South Asia of 0.2%. So that's pretty good, and an accumulative peak, that is over 3 years, it's about 0.4%. And if you add to that what it is with uncertainty, so if the private sector is facing a lot of uncertainty, but the public sector has the means, if they do that same increase, the multiplier effect is even higher. The other thing is that we did a survey of South Asian experts in the region, economic experts, asking them, do you think that you have no fiscal space? Do you think that there should be more tightening? How should the government think about spending in the upcoming fiscal year, 2021, 2022? And most of the people, you can see, overwhelming majority of people say you have to increase spending, not just capital, which was the usual answer we expected, but on recurrent and health expenditures. And finally, before I give the floor to my colleague Maurizio, we will talk more, of course, about health and vaccination. Another issue of human capital that we're very concerned about is the crisis has really had an appreciation for long tail end risks, right? People realize now that things we thought would never happen actually can happen, like climate change. And so this is another sort of hidden disaster could be schooling, the effects of human capital on human capital of this COVID crisis. Because of the restrictive effects in South Asia, many more children are kept out of school compared to the global average, as you can see in the bar charts. And in fact, there's a fear that 5.5 million students will never come back. So there'll be a dropout. They'll have to go back to help their families, and they'll never go back to school. And we had already measured the effects on the economy and future wages. But the somewhat good news is that South Asia has been spending a lot in the last decades in human capital and in education. And if they don't have to spend that much, if they start thinking about reallocating, getting rid of inefficient expenditures, and doing things that will help the quality more than the quantity, it can have a big difference. So this is a good opportunity for them to do it, and they don't want to lose it, because once growth begins again, everybody forgets about these damages. So thank you very much, and I'm now going to unshare my screen and pass it over to my colleague.
Yes, thank you very much, Valerie. Very interesting. The presentation. Now, there's always a moment of panic when you have to start your screen, but hopefully it works smoothly. So I will present the thematic chapter of this economic update, which is focused on the vaccination campaign. So the the main issue here is that the first slide here basically gives you the whole story of the chapter. The rest will be detail of the story. So if you pay attention to this slide, you basically get the most of the chapter. So Valerie has already mentioned the enormity of this shock, so no need to repeat that. One key point that we are clear in the chapter is that the vaccination is not only a health measure, but also really an economic measure, because compared to other policy, other restriction, the vaccine have the advantage that they not only stave off the pandemic, but also they don't restrict economic activity. In other words, vaccine saves both lives and livelihood. So that trade-off is eliminated. Even with this advantage, however, the campaign of vaccinating the entire adult population is a daunting task. It's really a complex, unprecedented task that even very high developed countries will find hard time to complete efficiently and fast. The presentation and as the chapter highlights some of the issues with this vaccination campaign. First, that the vaccination has a very high benefit cost ratio. The costs are simply the purchase of the vaccine and the administration of the vaccine, but there are no costs such as in the lockdown of restricting activity, and so the benefits are very high. However, because it is almost a complete public good, or the eradication of the disease is a public good, there is a need of government intervention, and government intervention always comes with a limitation, one of which is financing this operation, which is fairly high and seems, but still feasible. There are other important hurdles to be overcome, such as at the beginning where we send the vaccine, because the vaccine is not instantaneously available for the whole population. So you have to choose some form of allocating this, and it can create issues with equity. And also even if you have good allocation rules and enough vaccine, the operation of putting them in the arms of people is logistically fairly complicated, and the health system of the region will face some issues, both from the supply side, but also from the demand side. I will explain better this. And the last important point that we make is that as Valerie was showing, the vaccination, the pandemic has had in its one of nefarious consequences is that it has impacted more heavily the poorer, and so has increased inequality. We don't want that the vaccination campaign kind of replicates that, and therefore vaccinate first more privileged and last less privileged. So equity is really important and can be obtained with a good vaccination campaign. So that's the storyline. Now I will give you some more details. I'm a bit concerned about time, so I may rush some of this, but maybe if you have some questions, or you can see the details in the chapter. So the first thing that I mentioned is that the vaccine both affect save lives and livelihood, and this slide the first one I can skip, being the slide about the background information. But let me show you first how it saves life. So the pure health benefit in terms of years of life saved. This is a study that is based on a work with Anup Malani from the University of Chicago, who is a very good data on a state of India, Tamil Nadu, which is a study not only of case and deaths, but actually on seroprevalence. You see on the left-hand side graph, both the infection fatality rate, the IFR, which is the probability of dying from the disease if you contract the disease, and the infection risks, which is the red line. And they're both on percentages. And as you can see, for the case of Tamil Nadu, the infection risk is quite low. This is because there is already a high seroprevalence. Basically, the people that have been infected are more than 40%, so close to half of the people are being infected. At that rate, the infection risk actually goes down. You all know probably that at 70%, you basically reach herd immunity. So there is almost no more risk of infection rate. The other important thing is that the fatality rate is very much higher for older individuals and it's almost nil for a very young individual. So when you combine these two and you compare and you simulate with this data, you simulate having a vaccination campaign with that or not having it, you obtain on the right-hand side the difference in number of life years. This is actually days because it's really small numbers. But the important thing is to see the gradient that in people that are 70 years or older basically have their number of years of life saved are 10 times higher than those of 30-year-old. So this is because even if their life expectancy is much lower, the younger one have a very low probability of dying. So, the importance, one of the main points here is that apart from this differential in the impact across ages, what is important is that you have to obtain the advantages of the vaccination. You have to act very quickly because the spread of the pandemic is ongoing and it's already fairly high, and so you are if you act too late, you don't take advantage of the vaccine. Now, in terms of the economic benefit, this is even trickier to calculate because you can't just simply compare what were the projections of the growth pre-pandemic with what is going on now, and imagine that the vaccine simply put you back on that projection pre-pandemic, because in fact the vaccine cannot really eliminate the damage that has already been done. The fact that a lot of firms have closed down, a lot of firms have not embarked in investments. As Valerie pointed out, there has been a decrease in the accumulation of human capital of education. So all of these losses are there and cannot be erased by the vaccine. The past is already there. So what the vaccine can do, it can anticipate the moment in which the recovery is starting. So The last column of this table shows you that if the vaccine is able to start the recovery from 6 months to 1.5 years faster than without the vaccine, those are the gains in terms of GDP. And they vary from 2.2 to 6.7% of GDP in the case of Pakistan to up to 48%, almost half of the GDP in the case of the Maldives. Okay, so that's the way we calculate the gains. When you put the two together, the speed of the vaccination, because of the spread and the health advantages that you lose if you don't start soon, and because of the less starting of the recovery, the main point is that you have to start as soon as possible. So those are the advantages. The cost are estimated in 3 scenarios. There's a lot of numbers here, but basically, let me go through it in a simple manner. So the cost of 1 dose in the first simplest scenario is obtained by summing together the distribution cost at home, which is $1.66 per dose. The cost of buying it, which according to Gavi is about $7 per dose, plus some international transport, which is $0.89 a dose, and then you lose some of these because of various reasons. And so you have the 10% at wastage. It comes down to $20, $19.27 per vaccine. If you assume this cost across all countries, that's one first scenario. Note that in 2021, so note first that you want 70% of the population to be vaccinated, and you obtain this in this simulation in this manner. In 2021, you vaccinate you get 20%, 30% covered, 20% by COVAX, so no cost, and 10% self-financed. In 2022, you have the remaining 40% to get to 70, which is all fully self-financed by the government. The other 2 scenarios, scenario 2 is a more realistic scenario because it doesn't apply $19 to all the cases, but applies some variation of that. Some countries are able to get better prices than others. For example, India, which is a producer in the Serum Institute, instead of $7, it's only $3 per dose, plus the other costs that I mentioned. And Bhutan doesn't even have any cost because 100% of the vaccine are being donated by India. If you apply this, the overall cost is smaller. And finally, an optimistic scenario is that let's apply to all countries the minimum of India of $3 per dose. So that's for all countries the same cost. Once you put together these 3 scenarios and the benefit that I mentioned, you have this table that shows you the very first important point, that is the benefit cost ratio is very high. Under the pessimistic scenario is about 3%, 3.46 times the benefit of the versus the cost for Afghanistan, and that's the lowest possible estimation. But for as soon as you move to more optimistic scenario, this goes to 5 times for Afghanistan, and for most countries is well above 10 times or even more. So the benefit cost is extremely high, and this should definitely be done. Okay, so I mentioned about the public versus private good, but it's a little bit technical issue, so I'll skip that. The main point there is that there is need of notwithstanding this large benefit cost, there is a need of government intervention, leaving this to the markets who want to work. And let's examine now how what are the challenges that the government face in implementing this vaccination campaign. The first one is that the financing, even if the benefits are really high vis-a-vis the cost need to be covered. South Asia has a disadvantage vis-a-vis the other regions that you can see here in this table, where it is the region that spends the least in terms of health spending as a share of GDP, both when you consider the public and the private, which is the second column, but even when you consider just the public spending is at 2% of GDP, so the lowest of all regions. So the starting point is low, and it's not easy to shift expenditures from something else to health. So that's a first limitation. Now there is a series of tables that shows put together the calculation from the cost that I showed you and represents them as a share of the total health, share of the budget, or share of GDP. And this basically show you that in the pessimistic scenario, you have, if you look at the last line of this very busy table, shows you the average for all of the region. And in the first distinction is that in 2021, because of only 30% of the 70% is vaccinated and 20% of that is covered by Gavi, the costs are not very high, but they increase quite dramatically in the second year, 2022, where the government has to finance the 40% all by itself. Some countries, specifically Afghanistan, Pakistan, Bangladesh, and Nepal, have a fairly large share of the budget that needs to be dedicated just to vaccination. And at times, this share of the total budget is higher than what they normally do for the whole of health. All of this goes down as the cost scenario becomes more optimistic, and in the best case scenario, it seems fairly affordable for the whole region. In 2021 is 0.3 of the budget, and for 2022 is 0.8 of the budget. In this most optimistic case, basically only Afghanistan, the cost is above 3%. So there are some issues for some countries. The region seems to be okay in terms of overall financing in the most optimistic scenario, but there is variation across countries, and some will require assistance. Now, the second big challenge is okay, we now have resolved or taken care of the financing. Now we are able to purchase these vaccine. Now we have to put them in the arm, and this is complicated because of limitation of the health system. Now, whatever news you read in the newspapers tends to be fairly optimistic. There has been a good start of the campaign, but this campaign has to last for almost a year and a half. And so it will become harder and harder once you have done the first batch of vaccine to go to non-urban areas, more remote areas. So I want you to consider that. And so that's where the supply side issue will become more important, and the demand side issues. Now, if we consider the performance of the past performance in vaccination, it's really hard to have adult vaccination. There's only one case where it's anti-tetanus for pregnant women, that is adult vaccination. Otherwise, whatever campaign of vaccination we observe are vaccination of children. And children are not all of the adult, and so it's not a perfect match, but it's fairly well. It performs fairly well, the region. Apart from some countries, here you have 4 major type of vaccination for children, and you have a series of dots that represent all the countries in the world, organized according to the level of development. Clearly, the richer the country are, the higher is the percentage of vaccination. But if you trace a line, which is kind of a regression line, you observe that a lot of countries in South Asia are above the line. So that's encouraging, apart from some exception, Pakistan and Afghanistan. However, even if they performed well on something that is not adult vaccination, there are some important limitations. One is this, I just give you some example here. One is this recommended minimum of health personnel. And apart from the Maldives, all countries are below the 4.45 recommended minimum between physicians, nurses, and midwives. And if you were to look only at doctors, it would look even worse in the case of these countries. So, in terms of personnel, there are some restrictions. And in terms of distance, another physical barrier is the distance from the health facility. Also here, there are some issues, because only about 50% of the population in most countries are at within 5 kilometers of basic health unit, and so the rest has to reach overcome a barrier of more than 5 kilometers, and it can become problematic. There's also a whole issue of cold chain that is detailed in the chapter, and I don't have time to discuss here. Now, even if the whole supply, even if the vaccine are available, doctors and hospital and clinic are able to provide mass vaccination sites are able to provide vaccine, there is still a demand side problem, which is people who have to get to willingly be given the vaccine. And here you see an interesting calculation. If you have a vaccine that is 90% effective, you have to vaccinate 77.7% to reach 70% of the population vaccinated, because of the lower than 100% effective vaccine. So if the vaccine is only 70% effective, then you have to have everybody to get one, because to get to 100%. And excuse me. And using data from a survey of MIT that has run with Facebook and Johns Hopkins, that we have access. They cover most of the world, including many countries in South Asia. It's the acceptance rate of COVID vaccine in this case is fairly high in South Asia. It's at 74%, whereas North America is only at 52%, and other countries are even lower. So this is encouraging, but there is a lot of variation within countries. So 74 is optimistic, but it's still an average, and there is dispersion of that. And we do an analysis looking at the microdata, and you discover that there are some characteristics of people that may help them get the vaccine or may hinder them. Here, I don't have time to go through it, but years of education is an important one. The more you are educated, especially a woman, the more likely is that you're going to get the vaccination. Income counts, but not so obviously all the time. From some countries more than others. So this is also one important issue that will become demand. The demand side will become even more important the longer the campaign will last. Finally, I mentioned equity as an important issue, and if we look again at the past, the situation is not so encouraging for South Asia. If you look at the disease burden, in this case is acute respiratory illness among children under 5 by country, by the quintile, you see that the incidence is much higher for the poorer than the rich. And this is the most recent observation. If you were to look at the variation through time, so on the left-hand side, you have the same data that I showed you before, but just across time for one country, Bangladesh. And what this shows is that overall the lines go down for all the 5 quintile, but the gap doesn't really change very much between the richest and the poorest. In 2007, it was 3.9. In 2017, is 2.6 percentage point difference. So the decrease is very small. And on the right-hand side, you see that in some countries, Pakistan and Nepal, instead of Bangladesh, is actually going up the difference in the richest and the poor. So this issue of disease burden impacting more the poor than the rich is problematic. And in terms of health itself, the immunization itself, again, contrary of the disease, now the rich quintile access more of the immunization. So you see a gradient, a positive gradient. And again, in terms of differences of this gradient, this is not moving very much. For some countries, actually going up. For Pakistan, in this case, goes up, as you can see. And it's fairly high. So you see that the difference in Pakistan for measles vaccination is 30 percentage point, and it's going up between the rich and the poor. So it's fairly concerning. For other countries that have increased their investment, for example, Nepal, in this case, the gap is going down. So I have some other issues on inequality, but I have spent already quite a bit of time, so I wanna stop here. This is the first slide that I showed you with the storyline. I'll leave it there, and I am done for now. Thank you.
Thank you very much, Maurizio and Valerie, for your presentations. So because of the time interest, let me read the question that we received from the audience as a group, and then ask you to respond together with your final remarks. Then we'll wrap up the seminar. Thank you for questions from Sasaki-san, Mori-san, and Chihiro-san, and Yoshino-san. I'll try to read them as a group. The first category of the questions related to financing challenges. Did you have chances to present the report to the South Asian government, and how did they respond to it, particularly with regards to challenging in financing vaccines? And then another participant asked the question related to the financing challenges. Why the expenditure ratio for health is smaller in South Asia region compared to other countries? If they should prioritize vaccine distribution or preparedness of the health system in limited budgetary spaces, what are other areas within health budget or even in other budget areas than health they should postpone in order to create enough budget spaces. And then Yoshino Sensei continued to ask, many South Asian countries accumulated large deficits. Interest payment will rise. It will lower future government spending in South Asia. Is there any new way to freeze accumulate debt by replacing World Bank bond, for example? So those are the financing challenges questions. So that's the first category. Second category of question is actually related to India. The increased infection cases in India are being reported by the media very recently. How much impact will this emerging trend have to the region's economic outlook and report analysis on vaccines in the region? For India, what does the World Bank plan to do in supporting India's efforts to tackle with the pandemic? And then another question related to India was, India is known for generic drugs. How much impact would India's presence and its capacity to produce generic drugs have in improvement of the people's health in South Asia region and India itself? So question related to India. And then another question related to regional integration. South Asia has been portrayed as one of the least integrated regions. Where does it stand in terms of the progress of enhancing regional integration? Would the pandemic offer opportunities to accelerate the regional integration, as the urgent collective action should be needed across the government, or regional integration in South Asia has a further way to go? So these are the questions that we received, and I sort of categorize as the financing challenges, India question, and regional integration questions. So I'd like to ask Valerie and Maurizio to come in to respond to those points, along with your final remarks to the Japanese audience, and we wrap up the seminar. Well, thank you very much. Over to you.
So I will answer a few, and I'll leave all the difficult ones for Maurizio. So there are some really good questions, and of course one of the questions was about the debt, and is this idea of if there's a new way to freeze accumulated debt by, for example, thinking of something like a World Bank bonds. And this is this is part of a bigger problem that not just people as in South Asia, but other people at the World Bank are looking at. One of the issues is that you also have private creditors, right? So one of the things that I didn't discuss so much this time is that you've had a buildup of a lot of commercial debt, external debt by a lot of these countries, not just, I know, in South Asia, but in many countries, including for IDA countries. So until there's some cooperation in which some form of system in which the private sector is involved, and that's really where there's a shared responsibility from the international community. There is this new facility. It's called the new international solutions, like the Common Framework for Debt, which is only just starting with the G20. And the idea is to facilitate and timely and orderly debt treatment for DSSI eligible countries, and explicitly require debtor countries to seek comparable treatment by other external creditors. That's from the point of view of the creditors. From the debtors, I think the idea is that those that are, as I mentioned before, willing to seek out creditors and to talk about these things, to have transparency, can do a lot. And there is already some evidence showing that countries that do that in the past have done better than countries that just haven't done anything and suddenly find out their debt explodes. So, but in terms of World Bank bonds, I don't think we're even close to that, in part because the World Bank debt itself is not the problem, right? It's the debt that they have with everybody else. On the issue of, yes, the increased COVID cases, yes, of course, this is a huge risk, and in fact, a lot of the forecasts, I didn't talk about the individual country forecasts, but as for India especially, there was a huge uncertainty to the outlook. In other words, whether it was going to be 10% or 6% or 12% growth in 2021 was going to depend on new outbreaks, which might require new restrictions. So this is already a new mode of uncertainty. On regional integration, I mean, of course, there's so-called vaccine diplomacy, right? I mean, as India has been amazing at. I mean, you heard from Mauricio that a lot of these people are getting free vaccines. They have really, until recently when they've gotten a little bit worried because of this breakout, have been, exemplary in that regard. On other forms, I mean, there is some more talk now about, digital, tourism, employment, but there's still a long way to go for, major regional integration, like there may be in other places. But it's not necessarily going to be in trade, right? It's going to be another phenomena. So that's for me. And just to finish off, I'll thank you very much. And any other questions, we look forward to getting from you. We're happy to continue on a bilateral basis and for any other issues.
Okay, so some of the remaining questions include why health expenditures are low in the region. One quick reason, one simple reason is that the age, the structure of the population is biased towards the young, and as population age, as populations become older, the health expenditure become a more important issue. Secondly, is just simply that the governments, the public expenditure on health is small because governments are small. The government, the tax to GDP or the government expenditure to GDP in countries in South Asia are all below 10%. So we're not talking about 40% level of OECD countries, or Japan. I don't know exactly what it is, the tax to GDP in Japan, but it's probably around a multiple of what it is in South Asia. So that's one reason. In terms of those are two reasons for why the expenditure is small. In terms of how to reallocate expenditure because of the financing pressure, I'm not sure that there is a lot of financing pressure apart from some countries that I mentioned, but there is certainly there are a few things that can be done even before sacrificing expenditure in other sector in the health itself. One, which is fairly not very expensive, is communication strategy. It is very clear that being consistent with the communication, have one voice, and being driven by evidence is helpful in improving the acceptance rate and the take up of the vaccine, and in speeding up the whole thing. In fact, there is in the data that I mentioned that we use on the vaccine acceptance, we can see this survey has been carried out for the last 6 months, and you can see that the vaccine acceptance rate is exactly proportional, moves in sync with the lockdown stringency. When the government sends a signal that the situation is bad, people accept more the vaccine. Now that you don't want to have a lockdown to people for accepting the vaccine, but communication is one way of not increasing expenditure, but using more efficiently the money that they have dedicated to this. The second one series is that, as Michael Kremer, the Nobel Prize of Economics, that was hosting was our guest in one other conference, mentioned a series of things. One thing is, for example, there is not necessarily, it's clear that you are already quite protected with just one dose. So you can start with one dose and maybe delay the second dose and extend the coverage. He was also mentioning more studies on the amount of the dose. So maybe you can have a lower level of the vaccine, and so there are ways even before sacrificing other expenditure to stave off that. The last question that you had was on was it on increase spread of the disease? This is a problem, especially because it has an impact on the willingness to people to re-engage in economic activity and safely. So for that reason, having a good vaccination campaign is critical. And last, I finish with this important issue of equity. We have emphasized that the pandemic has had very unequal impact, and we don't want the vaccination to exacerbate that further, but we want actually to correct that. Thank you very much for the attention. Sorry about the long presentations. There is a lot in the chapter. Visit our website where there are videos, more alternative ways to get informed. Thank you very much.
Thank you very much. With us from Washington, D.C. this morning, Maurizio Bussolo, lead economist, and Valeria Marcel-Blackman, the senior economist, both in the office of the chief economist for South Asia region of the World Bank. Thank you very much for joining us this morning. Really appreciate it. Thank you. Great.
Thank you, Koichi. Good morning.
Thank you very much. All right, so we have 3 morning seminars next week. So we are going to be very busy next week. On Tuesday, April 20th, Africa's Pulse, the regional economic update for Africa. And Thursday, the April 22nd, Middle East and North Africa regional economic update. And Friday, April 23rd, we are going to feature the newest edition of the commodity market outlook, which is going to be issued on April 20th. So this is going to be the opportunity really for us to feature the report immediately after the issuance of the report. So please check our website for details of these seminars, as well as other interesting upcoming seminars online. So with that, I would like to thank everyone to watch the seminar. Stay safe, stay healthy. See you next week. Thank you very much.